This is Rick Rule for the Vancouver Natural Resources Investment Symposium, the virtual edition, 2021. I have the great pleasure to welcome back a repeat sponsor of our conference, Mr. Mike McNeilly from Metal Tiger. I had occasion to meet Mike some years ago as the result of some very successful copper exploration activities in southwestern Africa, and I followed his progress ever since. Today, we're going to talk about that. Mike, first of all, welcome to the conference, and thank you for your ongoing support of this venue.
Thank you, Rick.
I like to think of Metal Tiger myself, Michael, and feel free to correct me if I'm wrong, as a sum of the parts story. I believe that the value of the assets within Metal Tiger, that is to say the liquidation value, were it to be liquidated, is in excess of the share price. So perhaps you could begin by disabusing me of that, or by defending the thesis. Tell us something about the sum of the parts and describe, if you will, the more important parts of that asset base.
Absolutely. So look, if you look just at the balance sheet last year, obviously we do trade at a premium to net asset value that we declared in December. With that said, I would argue, that's an accounting valuation as opposed to what I think a lot of these things are valued at if we were to sell them on, or if they're indeed priced in the market. So in terms of the key components, one has to really start with the royalty. And we've had a lot of press in recent times in the UK, coverage by Simon Thompson, that has kind of put that message out there in bold lights. And that is showing that we've got a 2% net smelter royalty essentially over the entire Kalahari copper belt. 8,000 of that's with Sandfire Resources as our partner, so to speak, or the person exploring on it and developing assets there. And the other, we're actually putting money into the ground ourselves via Kalahari Metals, where we have a 2% NSR. So you're getting value accretion in two ways. And also, if we do discover something in Kalahari Metals, well, that could potentially deliver outsized returns for Metal Tiger shareholders if we find something economic. I can go into more detail of that in due course. Other than that, we have a very liquid asset portfolio. We do have a lot of concentration of risk in a single asset class in Sandfire. We've maintained that quite deliberately for the time being. And we do believe there's some value drivers to see towards the end of this year, at which point we may revisit that position. On top of that, we do have other asset classes, active investments that are marked to market, so you can go and see what they're worth. But they're also looking for sort of high impact discoveries, and they are backed by some of the world's top geologists, including one of the investments, Southern Gold, where a condition precedent of us getting involved was to ask Doug Kerwin, who is a very renowned geologist, to join the board of that company. And he actually sits here in Bangkok and lives nearby, and we meet on a pretty much very regular basis to discuss all things geology. So it's a great knowledge transfer. On top of that, we've obviously got cash, and we do an active trading portfolio which covers overheads. So if you were to look at that and try to apply a multiple to it, which you could do in theory, that is looking at, last year we generated almost, depending on how you calculate it on the trading book, about 2.7 million pounds worth of returns on top of what we started with.
Let's drill down into a couple of the more important assets. Sandfire in particular, could you talk to us about why you continue to hold that position? Not in terms of giving us inside information, but tell us something about the investment upside you see. It is, as you suggest, an outsized position, outsized concentration of risk.
Absolutely. Well, when people start to drill 2.4 kilometer holes in the northeast portion of something that they purchased last year, as in Red Boar, one has to think that the geologists are onto something potentially. On top of that, when you look at kind of the exploration budget, considering the amount of money that has been spent to date looking for another DeGrussa, one may assume that he may have found something that could extend his mine life. Now, if you look at the sort of model that values Sandfire, if he is able to extend his mine life by, even a year or two, just by having a drive off of the bottom of DeGrussa, well, that's just one catalyst that would, given the cash flow generation that he's seeing at the current copper price, could significantly re-rate the stock. On top of that, A4, which was actually something that was drilled back when we held Mod Resources, that has a 6.5 million ton resource. We're expecting at the end of the June quarter a mineral resource update on that, and hopefully that will be an improvement based on the fact that there were some ultra high grade intercepts that were reported there. We're talking 0.9 meters at 61% copper in a wider zone of about 33 meters at, I think, 13.3%. I mean, people haven't seen that in the Kalahari Copper Belt before, and this is relatively near surface. So that's exciting stuff, and I think when he starts combining that with T3, he may actually end up pre-stripping that and mining that first, which also has some value to our royalty. Obviously, it means we start getting paid a lot sooner. But on top of that, he could potentially do an acquisition that could be accretive. I know that it's been in the press that he's been looking to bid for EMR Golden Grove. They are running an IPO in Australia on that. It does look like that's going to get away. But obviously, deals in Australia that are accretive have tended to perform well in the aftermarket in recent times.
Let's also talk in some more detail about your efforts and your indirect efforts both in the Kalahari Copper Belt, and talk about why that's important to shareholders. I think that's a very misunderstood exploration asset, and I think it's been misunderstood for 10 years. It's a total mystery to me as to why it's misunderstood. But let's pull back the covers on some of that mystery.
Well, it's funny. I recently had somebody say, well, Anglo said if you don't have volcanics, which is the Quebe, then you shouldn't really be looking. I'm pleased to say that if they're right, up in the Kit West portion, we actually have outcropping Quebe, and we're drilling there very shortly in what look to be dead lookalikes in terms of EM signatures to A4 and T3, and it could be sort of a new district, so to speak. We do have an intimate understanding of the geology because of our past involvement in Mod Resources. I can't go into too much more detail than that, but suffice it to say, we have some insight that we believe not everybody else has. We are currently drilling at Endurance target and Perseverance target. That's within a 30 square kilometer radius, so to speak, of the T3 Mateo plant. We expect the permits for that in the next, I'd say, month. And that's also includes the A4 deposit nearby as well. So we have a royalty over that. We're drilling there now. And there's a particular one, Perseverance target. Why do we like it? It's a big, I guess, dome target. So if you go with the parlance of the past management of Mod, but it's very similar to Banana Zone, except it looks like it may not have the top eroded away. And so we're drilling that now with the hope that there's multiple structural models we're looking for, but that potentially the NPF, which has traditionally been structurally hosted on limb targets, i.e. quite vertical and difficult to mine, could actually be outcropping at the center of the dome. And therefore, if you do find that near surface, you can start to calculate where it might come up closer, at true width to the surface, and you could have an open cut mine. And if we do find something like that, it could be very big. And also, if you look at metal endowment, in terms of a ZIP analysis, not a perfect analysis, that would indicate when you rank all of them, and again, it depends on which resource and how you rank them, that there should be, in order to fit that statistical analysis, a much bigger deposit out there somewhere. And of course, that could be the NPF contact lying, undulating on the bottom in this central portion of it for, tens of square kilometers, grading, in 5 to 10 meters, 2%, maybe either side of that a halo. But at these copper prices, when you've got two open pits, and you can imagine, building some sort of a shaft or decline off of the edge of one of those pits to go down and mine that could be very attractive, and it could have the size and scale that you want. And the beautiful thing is, we have a royalty over all of that.
And the listeners should bear in mind when you talk about 2% copper, that the average mined grade in copper deposit worldwide is less than 0.5%. So when you're talking about decent grades, you're talking about decent grades that are 4 times the global produced average. Let's move on, Hal. Oh, let's not move on. Let's describe a little bit about your host jurisdiction. People are occasionally concerned about putting money in Africa. Talk to us about the social and political stability of your host jurisdiction.
Yeah, look, so Botswana's always ranked, or in the Fraser Institute, #1 in terms of places to do business for mining. The Kalahari Copper Belt, in particular, in terms of infrastructure investment, they are completing, high voltage transmission lines across it. It's very difficult to actually find out exactly where they're putting it. We've done a lot of work, and we think we have a good handle on where it is. But that'll be coming down basically the main highway. It'll be coming past Cooper. In fact, it's already should be being connected to Cooper Canyon, Koamaku's plant, and it'll be coming to T3, Mateo, and it'll be coming all the way down into the border of Namibia. That's huge, and when you look at the economics, that shows a very supportive government. On top of that, the Minister of Mines recently visited T3, have said that they want to support it. In terms of economy, right now they've got 2 million people. You could vaccinate. Sandfire could, in theory, with its cash balance, wish to not that it should vaccinate the entire population itself, or to ensure that things get back to normal. But the farmers, you have to manage communities correctly. I think there have been some community issues in terms of access to drilling in areas, so it's not without its risks. But overarchingly, there is tremendous support for mining, and the government certainly wants to see it happen. And they have a very long history of diamond mining in the country, and they haven't expropriated any assets that I'm aware of. So as far as I'm concerned, it's a top jurisdiction.
Finally, on the corporate level, one could argue as a consequence of your being listed on the AIM market that you have been, from the point of view of having African assets and in a sense an Australian domicile, an orphan. You are now pursuing a dual listing in Australia and London. Perhaps you could talk to that and how that might benefit your shareholders.
Absolutely. So we just completed an ASX dual listing as a compliance listing. It didn't trade much on day one, although we do have some liquidity. To be honest, I think the ASX, we've frequently been doing a lot more deals in the last year on the ASX, and also thankfully in Canada. We've not been doing a tremendous number of deals on the AIM market or indeed in the London Stock Exchange. We feel that some of the maybe valuation or value in some of the things that we're investing in will be greater appreciated by a diversified audience. And look, we think it might help us to access some of the Asian capital that plays in the sector as well. And look, ultimately, to sum it up, we're unique. Everybody else has some huge CapEx bill at the end of the day, or have to find a way to convince the market that they need financing. We don't need to convince the market of a need for financing, and we have an asset, thankfully, that should continue to grow in value. And we have successfully shown, at least in the last year, an ability to largely cover our costs. So that is quite unique, and I think it's something quite unique to Australia as well. And we hope that will appeal to those investors there, and obviously whilst maintaining our base in London.
You will likely, in this video to this conference, be talking to people from 30 or 35 countries. Tell those people how, if they care to learn more about the story, they can contact you to learn more.
Absolutely. So you can either contact us at info@metaltigerplc.com, or you can visit our website at metaltigerplc.co.uk, or you can come and visit us at our booth here at the Symposium.
Michael, thank you for your success on behalf of shareholders. Thank you, too, for your ongoing sponsorship of the Vancouver Natural Resource Investment Symposium. We look forward to having you back next year and hearing about all of the value that you accrue for shareholders this year. Thanks again for your participation.